just very quickly, let me review the what I just told you on the US dollar. So basically, what I was talking about is this bearish continuation on the US dollar that we were expecting yesterday because of the big move to the downside on Friday below the 97.70 level, which is a huge um, level on the higher time frames. But what happened is that we broke to the downside, then we tested the 97.70 level again before going down and bottoming at around the 97.40 level. And now we are testing the 97.70 level again. So we are going to go to the gold chart right now, and I'm going to start explaining or start analyzing gold and why we have changed our view in gold. Because I'm going to start at with the long position that we had in gold because of this move to the downside and what we were expecting or was going to be the next move on gold if we had this continuation. But now we have changed the bias. So let's go to the charts again and let's try and grab some gold. All right, so this is my gold chart, guys. And last week we had a very good long position. If you remember correctly, we got filled during non-farm payrolls, right? We had a buy stop at around if I'm not mistaken correctly, we had a buy stop at around, yes, the 1272.90 level, right? And we got filled during non-farm payrolls. We had the first target right here at this zone at the 1285 level, and we got half of our position out there. And we move our stops just below the previous low. Let me thicken this chart out for you guys, and let's go to the hourly. All right, to see the actual move. All right, so we had our buy stop above the previous high at around the 1272 level, and we got filled to the upside during non-farm payrolls, during that big drop on the US dollar that we were talking about. Okay, we were talking about that big drop on the US dollar. Um, this drop right here, all right, this drop right here is the drop on the dollar that we were talking about, and because of that drop is that we got filled to the upside in gold. Of course, that we were looking at this zone, uh, uh, of support to buy gold, and if we were to break to the downside, or our long idea would have been invalid. But we actually got filled to the upside and we hit that zone of resistance. Now what we did is that we took half of our position here and we move our stops below the previous low at around the 12 if I'm correctly, yes, the 1277 1276.90, if I'm not mistaken. And what happened is that we got stopped out on a win. All right, so we make about 100 pips on the first position and about 40 on the second position, which is great. But the thing is that because we didn't have a continuation to the downside on that move in in um, in the dollar, right? Let me just refresh my dollar chart. Damn it. Well, it's fine. Because we didn't have this continuation to the downside in the US dollar, and not only that, but because we are failing to move above this very important zone of resistance, all right, this very important zone of resistance. If you remember, last Friday we were talking about this zone being the make it or break it zone, okay, because of how it was rejected as support and then how it was tested as we broke to the downside. And because now the US dollar is not moving down but it's moving up, and testing again that 97.70 level, and now trading above that 97.70 level, we have changed our bias to a short in gold. Well, not a short, but a bearish bias in gold, and that's the main reason. All right, the main reason that we have changed our bias. Well, not right now. Gold is spiking, but I mean, we will not turn bullish unless we break with this zone right here. All right. This is gold for now, and let's go back to the DXY. All right, DXY chart. And again, guys, if we turn bullish in gold, I mean, remember that, yeah, the US dollar and gold are correlated, are correlated, now are not, well, they're not correlated, but they're inversely correlated, but it's not a perfect inverse correlation. All right. Yeah, if the price of the if the US dollar appreciates, gold tends to or the price of gold tends to go down. All right, but it's not 100%. But you need to know this because it, it really moves. The US dollar really helps on moves in the gold market. Now, again, we are testing the 97.70 level again, right? And it's being rejected, and that might be the reason that we are right now in gold. But that doesn't mean anything to me, right? This really doesn't mean anything to me unless we break above this area of resistance. All right, cool. So let's go back and let's have a look at the euro versus the US dollar. All right. Now, the euro versus the US dollar. Very interesting position that the euro versus the US dollar is at. Now, we're going to go back again to our news terminal because I just saw that we have new traders joining in, and it's important for you to know what we shared before on these on the Euro USD. Just a minute, guys. I'm having some technical issues. Just give me 1 second. All right, guys, I'm back. Just having a little bit of issues right now, technical issues. If you bear with me 3 minutes, I will be right back. Okay. I think I just clicked all the way all over in my just bear with me just a second. All right, so I'm back. Okay, so basically we're going through my news terminal because I there's a lot of you that just joined and didn't see and weren't able to see what's going on in the European Union. All right, basically we had well, it's going to go up right now. You're going to be able to read it. Again, apologies about the speed. I don't know what's going on. I'm gonna have to look at this later, but we're going to finish the daily edge. Don't worry about it. Well, before after, yeah. while we wait while it loads, let me just refresh that gold chart. And as you can see, I mean, because the New York, the New York session is about to open. I mean, it's very likely that we are just looking at a rally uh, for big money to short in a better level or a better position. So yeah, let's wait. Let's talk about the Euro USD again, and we're going to go back to the news terminal after a while. So let's talk about the Euro US dollar. The Euro US dollar again is moving down, respecting this down structure, right? It's going down and then moving up in a continuation pattern, moves down again, up in a continuation pattern, and then breaks down. Now, this is a very important level that we are looking at because of this. Now, let me thicken just a little bit this again. All right, that's fine. So basically, we moved to from the highs at around 114, the lows at around 1210 or so, 112. No, I'm sorry, 1180, 85, right? But the real area that we are looking at is this this gray area that I have marked right here, right? Now, let me just get rid of this rectangle that we have right here. All right. So this is the area that I am looking at. Okay. Very important zone. This gray zone right here. If you can see, it was tested as support with, and it was a zone where buyers were found, not buyers, but also sellers took their profits, and buyers were found for the first continuation pattern that we took right here. Then we broke to the downside and we tested it again, and again and again. Now we have rejected it, and if you're a premium subscriber, you know that we already took that short position in the Euro US dollar, and we are actually in the money in the Euro USD. But what to expect from the euro versus the US dollar? And that's easy. If we go to the news terminal, again, if we go to the news terminal, you can see that the EU Common Spring Economic Forecasts 2019 outlook cuts the EU 2019 GDP from 1.3% to 1.2%. It cuts the German GDP and the Italy GDP. And raises the budget deficit to GDP from 3.1 to 3.5%. So basically, bad news coming out of the EU, and that's one of the reasons that we are thinking about shorting the Euro USD, and actually have shorted the Euro USD. Now, if you look closely at that level that we were looking at, and if you look closely again how the euro versus the US dollar has been behaving, you can see that we were, in my opinion, again, in a small continuation, um, in a small continuation pattern right here. All right. So again, move to the upside, and we have broken to the downside. So what the level, one of the levels that I'm looking at is the 1125 level for a retest. Okay. Now it's very likely that we are going to go down here, and we are going to find buyers around this level. It's very likely that because we broke with the previous pattern or the previous formation, that we are going to go down. Not only that, but because of what I just showed you, or the news on GDP, on deficit to GDP coming out of the EU, and of course the tests that we have been seeing on the DXY, that it has been testing the 9770 level over and over, and if it breaks to the upside, we are going to be looking at another leg, at another bullish leg on the US dollar, which means that this is going to help our bearish case on the Euro USD. So this is my analysis on the Euro US dollar and the reasons why I'm looking to go short on this currency pair. But let's have a look at a larger time frame on this currency pair, and let's see what could happen if we actually break with the 112. I'm sorry, the 111.25 level. Now, if you look closely, this is what the Euro USD looks like on a daily time frame. All right, um, and the big level before looking at the 11.25 was the 12 level that we were testing again and again and again, and then eventually broke to the downside. But if we break with this level right here, the next level that we are going to be looking at on the long run is this. It's the 060 level. All right, maybe the O, yeah, maybe again the 0925 or the 0920 level if we break to the downside. So right now, we what we are looking for is a bearish continuation on the euro versus the US dollar, not only based on a dollar rally, but also based on a bad news coming out of the EU regarding the GDP. All right, now that's for the euro versus the US dollar. If you guys have any questions, feel free um, to type them on the chat, and we are going to go to look at the GBP versus the US dollar. Now, the GBP versus the US dollar was earlier today at a very interesting area. If we go back to the hourly and we thicken this, we actually had a buy order above the previous high, right? And this is one of the reasons that I don't buy or sell at market, right? Because I mean, I could have bought here and I would have gotten a much better risk to reward ratio, and I could have bought with bigger lots at this level. But the move to the ups, yeah, we were testing the previous zone of resistance that had been tested as support before. We were testing it again, but that, in my opinion, is just not enough for me to go long. So I wanted for price to break with the previous high in order for us to ride it and test to ride it to test again the highs at the 31.73 level. And I mean, yeah, we broke to the downside on the GBP versus the US dollar on a US dollar rally. And what we did is that just deleted the buy order without taking any hits to our equity. Yeah, there's a lot of people that did take hits on their equity because they're too eager to jump into the market when the actual setup is only brewing and hasn't been confirmed. Now let's have a look at what's going on here on the pound US dollar and why it has stopped on the level that it has. All right, so if you look at this level, the 3045 level, the 3045 level, it was a previous level of resistance turn support. Okay, very important to notice that in historic price action. Of course, it also was a level where high volume had been traded in the past, and it was expected that if we broke, if price broke with the 3080 level, that this level was going to be tested, and short-term or Momo traders were going to take their 32 pips at this level. But what's to expect of this currency pair? Again, uh, again, if you take, if you take a parallel trend line from the trend line that we drew on the upside, it looks like a flag or a continuation pattern, right? If we look the price that has been moving from these lows, to these highs, then on a continuation pattern, then breaking on non-farm payrolls, and then moving down on a flag, we could be looking at the spot or the test of the lower of the lower trend line of the flag for a continuation. But the move on the US dollar is going to be what determines on the GBP versus the US dollar, because I mean Brexit talks have cooled down. Yeah, we do have, I think, UK GDP coming out tomorrow, if I'm not mistaken. That will definitely be a trigger to the downside um, if the numbers hold as expected, because we are expecting worse than last month's numbers on GDP growth out of the UK. So if this happens, yeah, the GBP versus the US dollar is going to sink. And if the US dollar manages to break above the 97.70 level, well, it will definitely sink. And what's the next level to look out for the GBP versus the US dollar? Well, that's simple. It's this level right here. All right. It's this level where, after a big drop, just look at this candle. This candle is about 28 pips. Big drop considering price action before that candle, right? Big drop, and then buyers were found. Boom, non-farm payroll. So this is a level that high volume was traded, where big buyers came into the market, and where where sellers are going to be taking short-term sellers are going to be taking their profits. Now, if you notice this continuation pattern that I marked as a flag is no longer valid because we are moving to the downside on the GBP versus the US dollar. All right, and we are breaking with this level right here. So let's go back to the 4-hour chart and let's have a look on why this level is so important. The one that I just marked right now, the 29.90 level, this one right here. Well, this is a level that has been tested quite a bit in the past. And after big drops in the GBP versus the US dollar, this is where buyers have been found. All right. And not only that, if you notice this third rectangle that I am uh, putting on my chart right here, there is an area of big volume that was traded in the past. So if we go back to the hourly, this is where I expect some reversal to happen, maybe in the short term, or maybe it will give us an opportunity. Well, if we get a pullback, let me just show you what I mean. If we go all the way down here and we get a pullback to around this level right here, which is let me just grab this, which is, I'm sorry, which is this level right here, we might get an opportunity to go short on the GBP versus the US dollar right here for a continuation to ultimately test the lows, the lows at around the 28.90 level. These lows uh that is where we found buyers, or the lows before the move to the upside, before the big rally. All right, before this big 300 pip rally. Okay, so this is my view on the GBP versus the US dollar. I'm definitely not a buyer of this currency pair, given that we expect bad GDP numbers. I'm sorry, and of course that I expect a bullish leg on the DXY. DXY is the US dollar index that is testing the 97.70 level again, and is very likely to break to the upside, given um, given the data that is coming out. All right, so let's have a look at the US dollar and versus the Canadian dollar. That's it. Yeah. And gold is just testing again this zone, the 1282 level, 1282.50 level. And I mean, I wouldn't be so concerned if you are short in gold. I wouldn't be so concerned from this rally. And I mean, if and only if we break above again this zone is where I would turn bullish in gold. Now let's have a look at the US dollar versus the Canadian dollar. And that, you know what? We are going to have a look at the New Zealand dollar versus the US dollar. Now, if you know me, the New Zealand dollar versus the US dollar, or the New Zealand dollar is something that I don't trade. I don't trade the New Zealand dollar. I don't trade the Aussie dollar. And the reason is that I did a profitability analysis, and it turned out that I was losing money on on the New Zealand dollar and the Australian dollar, and also because I don't trade the APAC session. But we are going to have a look at this currency pair because tonight we have the rate decision out of the RBNZ. All right, let's have a look and let's find the New Zealand dollar versus the US dollar first. All right, this is it. New Zealand dollar versus the US dollar. All right. So very spot that the New Zealand dollar versus the US dollar is at, right? I know that you don't use prepositions at the end of your phrases, and I'm going to try to not do it again. So, interesting position that the New Zealand dollar versus the US dollar is trading right now. And the reason is that we are at the lows of this big move, or this big bearish move, right? And this very big bearish move might be fueled by a bullish US dollar, but it has been a big bearish move of around 320 pips. This is the 4-hour chart, guys. This is the 4-hour chart. And I'm sorry, let's go to the daily, and let's have a look at why the NZD USD has stopped here. Right now, you can figure out why, but I'm going to point it out anyways. Right here, big area of resistance, broke to the upside, and was tested as support. Just look at this daily candle. This daily candle opened at this level. All right, this is huge. I mean, candles gives you clues, right? Of course, you can't take decision solely on candles or on candlesticks, but candlesticks gives you clues. All right. Now we are going to be looking at this big bad bullish candle right here. So it opened at the 66.50 level, right? It went all the way down here to the 65.60 level for around 90 pips. All right. So after this bearish candle, this candle opened and it went down 90 pips. All right. Big bearish move. Sellers were in control. We were breaking with the 65.90 level, which was awesome for bears. But what happened is that we found bullish and we found buyers right here, and the candle closed at the 66.90 level, which is a 128 or 130, give or take, pip rally in one single candle. Of course, it's a daily candle, but the move or the change in bias in just that one day has to tell you a lot about this level. All right. And then we move all the way again to test the highs at around the 69 level. And boom, we crashed again to test the 65.90 level. And we found buyers, and now we are testing it again. And if you look only at this bearish candle, this daily bearish candle, that tells you a lot. All right. To me, this is very bearish, and I would not be a buyer down here. I would never be a buyer down here. Just look at this daily candle. Of course, the day hasn't it's not over yet. Yeah, we have the rate decision coming up later today. But of course, it's later today for us. It's tomorrow for um, for the people in of New Zealand, or how you call them, the New Zealanders. Yeah, but the thing is that this is looking very bearish. If we go back to the 4-hour chart again, um, I wouldn't be a buyer just because we have this 4-hour on this candle of indecision. So basically, what's going to happen here is um, let me just get again my my terminal, my news terminal, and I'm going to go and look for the economic calendar. All right. And the reason I'm going to look for the economic calendar is because I don't remember the exact numbers of that. I don't because I don't trade the New Zealand dollar versus the US dollar. I don't remember where the rate is currently, and the what the expectations are. All right. So let's give it a minute for it to load. I don't know what's going on with my internet, guys. Very slow today, but I'm definitely going to get a look. Calling support after today's daily edge. So let's have a look on the New Zealand. Here it is. So the official cash rate is at 1.75. Let's have a look at what has happened uh, with this. With the cash rate on New Zealand. So basically, we've had from 2009 the cuts. Wow, the cuts on the New Zealand cash rate, official cash rate, were tremendous. And then yeah, they tried to hike it, didn't work. Hiked it, didn't work. And then on 2015 they again started to cut the um, the cash rate, and it has been stable at 1.75% since November 2016. All right. Now it has been stable since November 2016, which means that again, I haven't read um, the last state RBNZ monetary policy statement. But I mean, it's very likely that the cash rate is going to not be cut or not be hiked. It's going to stay as is. So what's going to be important out of this, out of today's RBNZ decision is the actual bias of the central bank. I mean, and when I mean bias, the outlook that they have on the economy. All right, if they're planning for rate hikes in the future, if they're not planning to on rate hikes at all, that's going to be well. If they're planning, if they're considering. And if in the language you can read that they're considering rate hikes in the near future, well, that's very hawkish, and that is going to appreciate the New Zealand dollar, which is going to uh, be very bearish. I'm sorry, be very bullish for the New Zealand dollar versus the US dollar. Now, if in the language you can read that they have no expectation whatsoever on hiking the official cash rate, well, that's going to be very dovish, and that's going to be bearish for the New Zealand dollar versus the US dollar, because I mean, if they are not looking to hike the official cash rate, that means that they feel the need to intervene in the economy to give it a boost by maintaining the cash rate at a low rate and making cash cheaper for banks or for commercial banks. That is the main reason economic or and monetary policy reports are important, to get a bias out of the central banks, which in their case are what moves the currencies. So that's my thoughts on the New Zealand dollar versus the US dollar. Again, guys, I don't trade this, but these are the levels that I can look at on my chart, and this is what I would be waiting for, or what I'm going to be looking to see on the monetary policy report of the RBNZ. Now, again, if we have some hawkishness, that's going to be bullish for this currency pair. And um, well, I'm going to tell you something. And if we actually break with this trend line, I would definitely going. I'm going to be looking for a buy position, and the reason being that this is a very long trend line. And if I'm looking at risk versus reward scenarios, and not focusing on whether I in the past I have made or lost money with the New Zealand dollar, and just focusing on the simple math of trading, I would be a buyer if we break above the trend line and if we break above this level right here. So if we have good news coming out of the RBNZ and if we break above this level, I will be looking for a retest to buy a bullish continuation, because the risk versus the reward would be there. And of course, that I would share that in the premium Tradimos premium community, signal community. And again, if you are not a premium member, I don't know if you are or if you're not, I'm going to leave you here a a um, a link. Go tradimo.com, where you can get a 1 month trial. All right. So I think this is it for today's Daily Edge, guys. If if you came here from Facebook, Reddit, or other social media, and if you want to get notified every time I go live, just go here and leave your email on my mailing list, and I will notify you every time I go live. Daily Edge. So the first one is to get a 1 month trial. The second one is to get notified every time I go live. And tomorrow we'll be looking at the New Zealand dollar versus the US dollar again to see if we might get a possibility of a buy here. But I think that that's a stretch, because I don't see the RBNZ doing anything other than maintaining their interest or the cash rate as 1.75%. And I think that we are definitely going to be breaking with these lows. So I will be, of course, if we break with these lows, I will be looking to sell rallies. All right. I will be looking to sell rallies for a bearish continuation to test ultimate lows at around the 64 35 level. Nice, 150 pip win if we actually break to the downside. Again, because it's a central bank event, we might not get the possibility to sell a rally. But we will see that tomorrow, guys. And again, if you are not subscribed to my mailing list, I urge you to do it, because I send not only notifications when I'm going to go live, but also I send cool stuff. Sometimes I even send some free signals, etc. So I'll see you tomorrow, and I wish you a great day.